or hey, Steph. Nice to meet you too.
What's going on, Kevin?
I've heard Jack a lot.
Oh my gosh, this is iconic. This is a very different kind of episode that we've had, by the way. This is lovely.
100%. Yeah, it's
Every show's an episode of entertainment.
Oh, absolutely. This will certainly be entertaining. How are you? We're excited to chat. I feel like reading the articles about you have already given me lots of heart palpitations and ups and downs. I feel like I'm
Thank you.
ready
It has been quite a roller coaster the last few years. But as you also probably saw in Forbes article, I revealed myself. Hi there.
Hello.
My name is Kevin Chu.
Yeah, give us
I think
the
this
full
is my
intro,
first
Video
face reveal.
Wow. Okay,
Wow,
we'll take
amazing.
it. We're honored.
Absolutely. Hey, Kevin, when we met at that event, I had no idea. I just thought you were like a smart, funny person that I'm always looking for that one person at events. No offense to the event itself, that I actually like. It's like I don't hate myself for going to it because I think I'm secretly an introvert. So, so I met you kind of and then I was like, I found out more about your story, and I'm like, what in the actual fuck?
Yeah, it's been a pretty crazy roller coaster the last few years. I'm really glad that the story is kind of finally out there, and I could kind of be myself. I've definitely been donning the mask and kind of living this alter ego, secret identity for the past few years, especially when I was working at Google. But now that I'm fully, with AfterHour, degenerate in public, it's been a lot of fun.
Oh, that's so funny. I was going to say, what would you... So you worked at Google full time while this was going on, so you didn't have to make up a fake job or anything. So you would just omit it from your story. Is that right?
Basically, yeah.
Oh, interesting.
I was working
okay.
I mean, and I think, this kind of crazy trading was definitely enabled because of work from home and the pandemic.
Mm-hmm.
I literally had 2 laptops set up, my work laptop on one screen, my trading laptop on another screen, watching the charts ready to go at any time.
Oh my gosh. I love that. That's
amazing.
Iconic.
Well, we'll get into Sir Jack in After Hour in a second. But maybe just to kick things off, maybe tell us a little about yourself. How'd you get into tech? Stripe and Google, you worked at some iconic tech companies. How did that all come about? And why did you even want to do this in the first place?
Oh, yeah. Actually, I remember that very specific moment in high school where I had this epiphany that I wanted to have some kind of dream or something. I wanted to stand out in the world and be special, all those kind of teenage hormonal kind of feelings. And I started thinking about what are the dreams that normal people have, right? Go to a good college, get a good job, have a family, buy a house, et cetera, et cetera. And those all felt really boring to me. Maybe it was that kind of special snowflake kind of feeling. I really wanted something to call my own, right? And that's coincidentally when I stumbled upon the origin stories of companies like Google, like Yahoo. This was probably around 2006, where I was reading up on TechCrunch and Wikipedia about all these backstories of these folks that started a website, a company in their garage. And the epiphany I had was oh, wow, these things that exist in the world were actually created by people. They didn't just magically poof into the air, right? And there was something called programming. There was something called, startups and this venture capital landscape, et cetera, et cetera. And I was I want to do that. That sounds really cool. That sounds really attainable, right? Versus things like getting a PhD and winning a Nobel Prize, or climbing up the ranks in an investment bank or something like that. It felt a lot more go-getter, and so that really is what brought me to Silicon Valley. I got into Stanford, very fortunate for that, and kind of that was my big step into tech.
I'm curious, did you always have a risk-seeking side to you, or how would you describe your risk tolerance even at that stage?
That's a really good question. I would say, it's funny when I talk to more and more people about how they do investments or how they approach risk. I do think my risk reward imbalance is on the extreme. For the longest time, I only basically looked at the reward side of that equation.
Mm-hmm.
Interesting.
I didn't do the EV math times 0.0001. I just saw the reward. It's billion plus. Okay, that's what I want. I don't want something where the reward can't get that high,
I feel like that's the secret to being a good founder, though, because if you know too much about the potential for the downside, that's when you talk yourself out of great ideas. So I think there's something to that.
Yeah. And if you look at the through line through my career, it's kind of done this sinusoidal back and forth between risk on and risk off, right? After Stanford, I did a startup called Fan Hero, basically an early Patreon competitor. trying to help the long tail creators. And that flopped majorly. It's a really hard business to do. And so then I went to Stripe, a relatively safe and well-known company even back then. And after a few years at Stripe, I got really itchy again, wanted to dip my toes into something with higher, reward potential. Crypto was taking off. I was trying to figure out, can I start a career in crypto, whether it's like, helping out with smart contract writing or auditing or starting a crypto company myself. Lost all my money there. That's the TLDR in the 2018 crash.
How did you lose it? What were you invested in that caused you to lose it?
So before I was Sir Jack a lot, I went by the moniker the Shitcoin King.
It's a great nickname.
Amazing.
I think I got the domains. I think I got the handles. My profile
it's still going to be worth something.
Yeah, I was about to say you should definitely squat on that domain.
That. Absolutely.
My profile picture was the poop emoji from the Emoji Movie.
Oh my gosh, that's amazing.
And my style was actually very similar to how I traded stocks in the last few years. I basically went all in one coin at a time. That was it. I just took the whole pile, just shoved it in because I thought it had potential. I thought it was on the upswing, and I wanted to ride it out. Yeah. Unfortunately, in 2018, nothing really ever bounced. So, after that wild ride, I basically had no money left, and I needed to, I was in Thailand at the time, helping out with a couple of crypto companies over there. And when I came back stateside, I was like, okay, let's get a proper job this time. What's the most financially stable place to be? And it ended up being, at Google. So 2019, this is, we get a risk on and then risk off. Yeah. Like, okay, let me just be a good boy. Like, no more wild adventures. That was, I feel like it's that, like that Rick and Morty episode, right? Where they just kind of regret everything they just did. It's like, okay, 2019, be a good boy, be a good employee. It was great. Like, it was, I was able to kind of spend a lot of time with my wife now, girlfriend then, and kind of take care of myself more. But then in 2020, I started getting itchy again. I was exploring some startup opportunities, and then the pandemic hit. So I was like, okay, I probably want to hunker down, kind of stay here. And this whole foray into like meme stock trading, go low, all-ins, WallStreetBets was a complete accident. It was a complete accident for several reasons. One was the 35K I started with in my 401k was an accident. So the story behind this is that Google gives out annual bonuses every January, right? I think it kind of lands in your bank account at the end of January. And I wanted to be selfish and short-term minded that year and actually take it in cash. So the default is they push it into your 401k because that's like pre-tax money and they also match it. And so most people want that, right? I didn't. I had no money. I wanted it in my pocket, take the tax hit, whatever, and buy some toys with it. And so when I went to investigate this in like early January, I found out, crap, the button to make this switch was back December. So I actually missed the deadline to get the money out of my 401k. So that's why I started, early February with 35K roughly in my 401k. It was just kind of sitting there. It was stuck. Like you literally can't withdraw it while you're still employed.
Wow.
So I was like, this is just going to be stuck for 35 years. What can I do with it? Google is one of the few companies, I believe, that allows you to invest in single individual stocks with your 401k. It's called a self-directed brokerage. I believe not every company offers that, but Google did. And so I just like moved everything into the self-directed brokerage portion. And another just random coincidence is that I also have a podcast that I do with a mentor of mine, Timothy Lee, and it's called Explain Like I'm Five. We basically do like these short snippets to explain concepts to a 5-year-old. And at the time, we did an episode on face masks. So, because COVID was picking up and people were talking about N95 versus KN95 and cloth masks, we did an episode explaining all of them. And through that research, I learned about this face mask company based out of Salt Lake City, Utah called that stock ticker was APT. And I was like, if this COVID thing really, really takes off, American made is probably going to be like a big, driving force for demand. Why not put all 35K into APT? And within a month, it tripled. And now I'm sitting at 90K. And that kind of just kept snowballing. I just kept full porting the entire, port into one stock that I felt strongly about. and then it will double or grow up like 25%. I think they call myself, people call me a swing trader or momentum trader. I'm constantly chasing momentum, and I
Kevin,
just kind of pick it up.
before you go on, I have to ask, how did your now wife, girlfriend at the time, feel about this? I have
Oh
to
my
know.
god!
Did she know that you were betting your
I told
entire
her.
25K?
I told her at the 90K mark.
Oh God! Would you just keep telling her at the next marks?
Make the money, and then tell her, and then she can't be upset. That's brilliant. Love that.
And Kevin, I mean, a big part of this is kind of your relationship to Wall Street Bets. In the MSNBC doc, you describe Diamond Hands for those who want to watch. You describe the WSB community, which is a subreddit for folks like yourself, degenerates who are kind of making interesting stock trades, as a very large group of idiots who got fed up with the world, who got fed up with being told just go to college, get a job, make a living. Frankly, that's not realistic for our generation. Why do you think Wall Street Bets resonated for you, and why do you think it resonated so much for everyone else?
Oh, totally. And I still strongly believe that. I call myself like an armchair like sociologist or something, where I just kind of study the cultural trends and what makes one generation tick versus the other. Living on the edges of like weird TikTok and this discords and the internet. I strongly believe that we're in late stage capitalism, right? There's a whole subreddit dedicated towards that philosophy, with a deep kind of irony about that, which really to me represents the last squeezing of productivity and efficiency out of everyone. And we're starting to feel that because of everything from the politics to the widening income gap and all these other things that are getting just more amplified, exposed through social media as well. And what I see is that this American dream that was popularized over the last 100 years, that you could start rags to riches. Everyone loves that story, right? But that's what it is. It's a Disney fairy tale story that was still believable back maybe up to the 90s, but either because of late stage capitalism, because the rules have changed, because of the internet, some mixture of those has exposed the younger generation to be like, that's bullshit now. Like, I gotta take bigger risks. It's impossible to kind of get to that, get that dream. And I see people reacting in different ways. I sincerely believe that Wall Street Bets, the anti-work and lie flat culture, and also even the FIRE movement are all actually the same thing. They're just different reactions to this kind of sense of hopelessness, right? Like some people are being mature about it and saying, okay, I'm just going to save all my money, live frugally until I hit my number, and then retire on a 3% safe withdrawal rate, right? That's like a more mature way to tackle that. So that's the FIRE movement. And then you have the anti-work people who are like, no, give me UBI. I don't want to work. Bosses all suck and all that kind of stuff. You even have the double work people who are like working double and triple jobs, right? Yeah. That are reacting that way. And then Wall Street Bets is just like the funniest one, which is like, I'm just going to YOLO everything into like zero DTE options, this lottery ticket based off of some, stupid meme that I saw online. And then the first one's free. So that one like tripled your money. You're like, I'm a genius. I can do it again. And then they don't and they lose it. But it all turns into a pretty good show.
At what point in your journey did you join them? Like when you kind of made the bet in APT, were you already involved in Wall Street Bets, or was that kind of your debut? Like, say more about that.
Yeah, I actually didn't make my first post on Wall Street Bets until June of 2020, when I think I hit 600K. And my first post was purely out of ego because I saw this guy post that he made 20x in 4 years. It was like a line chart of his portfolio, and like he got like a lot of karma and gold, right? And I was like, I'm gonna one up you. Here's 20x in four months.
Oh damn! Wow, mic drop if I've ever seen one. Damn.
So it's purely about bragging. Yeah.
I love that. Cool.
And then and maybe you kind of alluded to this, you had an inkling as it related to APT with COVID and American made. Like before we get into some of your following trades after that with CODX and Norwegian Cruise Line, what does your process look like? Are you researching? Is it a feeling? Is it like a meme online? Like what goes into, a Sir Jackalot trade?
Yeah. It's really simple. I just look for something. I mean, there's like a couple of conditions I look for. like ideally it's kind of like near a nice floor. So from a technical analysis wise, I mean, even if you just look at the chart, a floor to me just means like, okay, selling has kind of generally stopped. This is kind of where it's like, hopefully, the worst it can go. Even if it breaks the floor, it should only break maybe like 10% or something like that. So you could kind of take that hit. And then there's like a catalyst coming up, right? There's something people are looking forward to. Actually, a large part of the community kind of thinks this way, whether that's an earnings report coming up next quarter or an announcement, or even just like a very strong rumor that something's going to happen, right? So there were just a ton of these flying off the shelves, especially during COVID. You mentioned NCLH, Norwegian Cruise Lines, for example. That was a relatively easy play because there was just this constant hope that cruises were coming back. It was like very dependent on just the CDC announcing that, oh yeah, no, everything's fine, cruises are coming back. Like that was false. They were not, but there was so much hope, and especially in like Facebook groups and on Twitter of people posting and like people like pre-buying tickets because they're so passionate about the cruise line, the cruises that they want to go on cruises that summer. That helped fuel the theory.
Yeah.
That feels like a non-obvious bet, or at least I remember at the time where people, cruises had such a bad rep because they were, the ships that got stuck offshore and people were stuck on this COVID ship and couldn't get off. And so I know a ton of people who wanted to bet on cruises, airlines, things like that, and they just never pulled the trigger. So I think you make it sound really obvious in retrospect, but I feel like it's actually wasn't an obvious bet to most people at the time, despite the kind of like pent-up demand or news, right?
It was definitely very risky because the bear thesis is that they're going to go bankrupt.
Right.
So that is pretty scary. But I don't know. I just felt like these cruise ships, they're not going to completely die, hopefully. And Norwegian Cruise Lines specifically, I think, had the smallest fleet. So I felt had the smallest chance of bankruptcy.
You ended up, and we'll get into GameStop here shortly, but you ended up over 200xing your money over the course of time. How much of it is skill and how much of it is luck? Like how do you kind of parse through those two things?
Okay, Guy Raz.
I don't claim any skill. I really do believe I just got extremely lucky. Everything from like how I started it, right, to like how I stumbled upon the stocks, and the timing of the market and my technique, right? Like think about it. There were no options, right? I didn't touch options. Options were not even available in my 401k. I actually appreciated that because that kind of held me back from doing some riskier plays.
Oh, wow.
And no margin either, right? So it was just purely just stocks and just like chasing these like, 50% swings, et cetera. I mean, I was doing this during the craziest bull run, ever in 2020 and 21. So I really do think it was just all luck. I mean, I say that right on my Twitter profile. I just got really lucky.
That's amazing.
You kind of continued with Slack and Palantir, and you got up to over 1 million. How did GameStop become a thing for you?
GameStop was the most interesting thing in the world because of the short interest ratio and Ryan Cohen, right? Like it just had this kind of story that was kind of unraveling. Well, actually, specifically how I stumbled upon it was I came upon this post on Reddit that kind of outlined the relative kind of interesting things they noticed, right? The 140% short interest ratio, the third stock that Ryan Cohen ever like invested in, the letter that he wrote to the board. Like it was like a strongly worded letter, like, "Hey, you guys better shape up, or else." And he like bought like more than 5% now. And there was also the Xbox, One S and PS5 coming out that winter. So there were a couple of story points that gave it a hope. But my specific thing was that I DM'd the author of that post, asking him like, "Hey, how much did you put in? Right? Like, how much? When did you put in? Why did you put in?" And he's replied back to me with like full English sentences. I'm like, okay, this guy's like actually like probably an adult, because you never know when you're talking to someone on the internet.
That's true. Yeah.
I had to like use my own like spidey senses to tell like, okay, this guy sounds like a rational adult with some like level of intelligence. And we started like this back and forth, and I asked him some more questions. And I was like, you know what? This sounds promising. He did his research. I asked him for some links, and he found me some links. And I was like, okay, full port.
Wow.
One point, I think it was $1.1 million in GameStop in October of 2020 at $13 per share. I think it was something like that. Yeah.
Wow. And I have a question. When you say all, I know you're all in with substantial amounts of money. Do you literally mean all in? Like you must preserve some, right? Like even if it's like 2%? No. Okay.
No, no.
Literally 100%.
Yeah. My
Okay.
my 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 accountant asked me like, "Oh, what other brokerage accounts do you have?" I'm like, "None." Like that's the only one.
So you're literally all in. Okay. Wow. And then when did I saw your post on Wall Street Bets as well? Like how did you get from that point of view making the investment to posting? What was that like?
Oh, what do you mean?
Oh, I think I saw in the article that you did with Andrew that you then posted on Wall Street Bets after kind of putting
Oh, right.
your
Right.
all
Yeah. So
investment into
what I
GameStop.
started doing after my initial kind of bragging post was I just started taking screenshots of my gains and losses like almost every day. I just started posting it on there, sharing my latest play or an update. People love seeing me win, and also people love seeing me lose, right? So both are great for internet karma. And really, that was it. I actually had no other social media presence. I didn't have a Twitter. I didn't have a Discord yet, just because I was, just trying to get karma on meaningless internet points on Reddit. But yeah, I started gaining a following. People started, DMing me more. I started. People don't know this. You actually follow people on Reddit too. Every user profile is essentially like a subreddit. So I
Mhm.
gained like over 50,000 followers on Reddit. And you can post to like your own profile, and people will see that. And so people started sending me, tips, and I started creating chat rooms with folks like theory crafting essentially, right? Or
Mhm.
people asking me questions. So it's actually a really kind of interesting way to kind of crowdsource and theory craft and hold each other tight on the bad days. I call it hopium, right? Or like confirmation bias or camaraderie,
I
internet
love that.
hugs, especially because it's a roller coaster. It's never a straight line up, and so you kind of need that sometimes. Otherwise, trading is a very lonely journey. Like there was no one else I could talk to about it in real life, right? Like I couldn't talk to any of my Google coworkers about it, even though I desperately wanted to.
Mm.
There were several, email threads about GameStop as it went up, and I was just like, "Yep."
Oh wow. Yeah,
Yeah.
what was
How?
that moment like?
Yeah. Did you want to just burst out and tell them it was you? Like, yeah. How did you think about
Oh,
that?
of course. I mean, not me specifically, but just I want to share everything I knew,
Yeah.
because I knew so much, and I was clearly very passionate about this, and I thought there was something really deep and actually interesting going on. And then when it was going up, I wanted to claim that I was right. Like the
Mm.
theory was right. I called this back then, um, but I couldn't share any of that because of just the social stigma attached to that. You're at work, you don't know what your coworkers might think. Even if you post on some like random Slack channel or mailing list, a coworker might also be in there and find out. They'd be like, "Hey, this guy's risk tolerance is off the edge."
So interesting. What was that like for you personally though? Like seeing that I guess like the almost like carrying those two identities to Lear's earlier point, like at
Hmm.
what point, I guess kind of leading into the fact that you ultimately revealed your identity, like how did that internal journey of kind of like holding those two identities and then kind of merging them together come to be?
Yeah, yeah. I would say the Sir Jack identity was really fun and freeing because I was able to really be my, I think, true self or my internet self. Especially at Google, there's a professionalism that you have to kind of bring to the table, right?
Mhm.
Um, I was always very jealous of the folks that could be themselves while at these kind of big companies, just because their vibes and personalities matched with it. You could tell, right?
Mhm.
I mean, even at Stripe, like there was a bit of a cultural mismatch. I would say there were a lot of very serious people there. And it's funny. I think I'm probably the only like consumer or even consumer social founder out of like the Stripe
Oh wow,
school.
interesting.
Like, yeah,
Yeah.
yeah. I know so many former coworkers who are doing companies now, but they're all basically in SaaS or fintech. Like actual money making. So
But
we'll
less
make money
fun,
one
you
day.
know.
Yeah. I mean, I've always been a consumer guy at heart. So
Yeah.
I think looking at the kind of through line in my career, I've always been obsessed with the creator economy, like the internet, finance in general. And I'm really glad that I'm able to kind of mesh all of that into After Hour now.
You turned $35,000 into $8 million. how did you know when to stop? Because the person who is able to do what you did is kind of at odds. Kind of, we're talking about this kind of almost like dual personality thing, like with the person who can get out at the right time. Like most people will ride the roller coaster all the way to the top and also ride it all the way to the bottom, and yet you didn't. And so, how were you able to kind of get to this point where you were like, all right, enough was enough. I'm ready to kind of stop.
Pure luck again. I just happened to hit my number, and then the market crashed, and I was like, I'm out.
Yeah.
So my last big play was something called Big Five Sporting Goods, BGFV. And the play was interesting. It actually felt very similar to GameStop because they announced a special dividend after an earnings report. And to me, that just meant like, oh, they're sitting around on a lot of cash. They must feel pretty confident in themselves. This special dividend kind of thing, right? And so this was November of 2021. So right before, the holidays, right before the 2022 crash. And I think I put like maybe 5 or 6 million into Big Five.
Wow.
And what's really funny is that I actually hit 10 million for just like 10 seconds. I have a screenshot of it.
Incredible.
And there's a saying, if it's good enough to screenshot, it's good enough to sell. And so
I love that.
Unfortunately, I wasn't able to, actually close it at 10, but I did manage to close it at 8. And it was just like a happy coincidence. That was kind of roughly my number. Like 10 million would have been the most ideal. 8 million was kind of like at the threshold of that. And then we already had, some holiday plans coming up that winter of 2021. And so I didn't want to be trading or holding anything risky going into that. And then, 2022, if I want to quit my job, then okay, no more. my girlfriend was like, okay, no more trading if you want to quit your job. And so I was like, okay, 8 million, that's good enough. And so I just decided to kind of stay in cash for the majority of 2022. And just so happened that 2022 was the year that everything went crap. Again, there was no foresight or no skill. It was just like, okay, I hit my number. Holidays are coming up. I'm good.
I know we're going to talk about AfterHour, but before we move on to that part of your chapter and story, I'm so curious about, when I read your interview, the thing that gave me like the biggest heart drop was, I forget what stock it was on, but you talk about basically like gaining and losing $1 million back to back, like back to back days. And I can't even imagine what that must feel like. Did that scar you at all? Like, clearly not really, because you continued on your journey just fine.
It happened so fast. It almost felt like a blur,
Really? Okay.
Yeah.
I don't think I forget that. I'm not going to lie. I feel like it would really stick with me, but you really saw it.
It was literally back-to-back days. The company was called Rocket Mortgages, RKT. And this was, I think, in February or March of 2021. I think, it had a short squeeze. Basically, where one day it went up 70%. I literally caught it like the day before. So that's why I went from 1.7 to 2.7. Kramer was talking about it. People were jumping on Twitter Spaces talking about it. Like everyone's talking about it. I felt like this squeeze at least had one more day in it. Usually these are not just one day blips. Usually they at least carry out for like one more day. So I decided to hold it. And then the next day it was gone. It was just like, boom, back down 70%. Right. So that's why it went from like 1.7 to 2.7 back to 1.7. It was just like, what just happened?
But that didn't impact your risk aversion or risk tolerance at all, it seemed like. Or did it?
No, not really.
Wow.
I would say like I ended up losing money on it because I waited until the next earnings report and then it crashed like 19%. Probably one of my worst plays actually. But that up and down, it was kind of part of the game, I guess.
Oh my gosh. Love that. Yeah. Perfect founder mindset.
It's interesting. I mean, in some way, like I was reading that you pay yourself as we kind of shift into AfterHour, like $69,000 a year. Also nice, by the way. And it's all going into your 401k. Like, you're obviously, maybe talk a little bit about what AfterHour is, but you're kind of fostering this community that's also kind of, probably in many cases, doing the same things that you were doing, maybe on different scales. And yet, like at this moment in time, you're also like you're in safe mode as it relates to your finances, even though you're doing the risky thing of starting a startup. So yeah, curious, like how do you miss it? Do you now, especially now that you're kind of building AfterHour, like is that something that you like look towards, or how does your feelings about it change?
Right. I mean, the way I look at it is that um, the majority of the funds in the 401k is parked in like the safest thing in the world right now, SGov.
Mm-hmm.
It's like a ETF for 1 to 3 month short term treasury bonds yielding, maybe 5 to 5.5%. The reason for that is so that I can, spend more time on AfterHour and building the
Mm-hmm.
app because, it's just very time consuming to try to stay on top of the markets. Um, Albeit, I did start a second challenge of a new 35K that I deposited to my Robinhood account. And that's been
Oh,
quite a roller coaster. Yeah, it was kind of it started off as kind of this marketing challenge. It was
that's cool.
a new story, right? Like
Right.
the Sir Jack's second challenge, follow me in the app, etc.
Hmm.
And that's been quite the roller coaster. It started off at 35K. I think it went down to 20K. I then went up to 140K
Oh,
back in like
wow.
June because of like Rivian and Adobe and some other things. And I did start playing with options as well in this new account, which are just crazy. But a couple of bad plays recently, it's back down to 35K. So it's been a full roller coaster.
So yeah, maybe tell us a little bit after our like why did you start it? Like what was like the impetus of like I was doing this thing as an activity, but I actually want to start a company around it.
Yeah. So yeah, After Hour is what I call the social media platform for the digital native investor. I believe in the last few years, the retail trader has just completely changed, and they're seeking things like community, influencers, verification. There's just too much spam, too much noise out there in the existing social networks, and a lot of the incumbents and legacy media platforms are just not vibing.
Okay.
Especially
Yeah.
every time you Google a stock on Google, you end up on places like the Molly Fool that are just like SEO spam.
Mm-hmm.
So I think there's a ripe opportunity here for a new platform dedicated to the way that the modern investor thinks. And our whole our whole pitch is what I call pseudonymous but verified. I noticed that most of these traders are on platforms like Reddit, Discord, and Twitter. And what's interesting about those platforms is that people are primarily pseudonymous, right? Like,
Hmm.
there's been this massive shift towards real name identity, and yet traders and people that talk about money so transparently are still on these pseudonymous platforms. And I think there's a reason for that. It's just like weird, to talk about money so transparently. I think it's kind of what some other startups and competitors have tried to do, but they just started off with real name identity as just weird. But when you are pseudonymous, you don't know who to trust.
Hmm.
These are just complete strangers online. And so we decided, oh, what if you connect your brokerage account and it can actually verify for real that you do own Tesla, you do own Rivian, right? When you're talking about Rivian or Tesla. And it's this interesting piece of metadata that's been so powerful, right? Like our app currently is incredibly basic. It's essentially like a Reddit clone where you can attach verified positions. So someone says like, "Hey, I'm really interested in Nvidia's earnings coming up. Here's my $500,000 in Nvidia." And for everyone else, that's like the ultimate proof of you putting your money where your mouth is. That you actually do own Nvidia. He just bought it like the other day, and then you can ask questions about it, etc. And you can also talk to other verified Nvidia shareholders too. So it's this very interesting primitive that adds just so much more trust, so much more weight and signal to this community. Um, so back to your original question, like why, how this started. Basically, when I quit my job at Google, I kind of just let myself get bored and see what I naturally gravitated towards. And even though I wasn't trading, I still kept coming back to these, stock communities. We would be watching like Jay Powell's speech together and like chatting on Discord. To me, finance has become like this reality TV show. It's become this form
Huh.
of entertainment, the same way other people watch sports or gossip about celebrities. We gossip about what Jay Powell's feeling, and like there was like a paparazzi shot of him at like a Grateful Dead concert like a few months ago, and you're like, oh, does he look happy or upset? There's like
That's so
these FinTwin
funny.
meme accounts, right? There's just this new ecosystem that's so refreshing, honestly, compared to this legacy financial media platforms like CNBC that take themselves very seriously. Everyone's wearing a suit. They're that whole. I think the modern trader, I think, really it's a different vibe essentially.
Yeah. The other thing, this is a slight tangent, but something that this conversation is reminding me of is I'm sure you've seen the meme of like the woman on the plane accusing like someone of not being real or whatever that
Yeah.
is. And then she recently came back with this whole, comeback story and this like beautiful photo of her sitting on the floor, and that was memed to death. And then I saw recently it was like a TMZ interview. I'm like, oh God, this woman's being surrounded by paparazzi. She's dressed exactly the same way that she was in that viral photo. Like clearly she's trying to get attention. And so people are speculating on like, is she trying to create like a business or some kind of like, what is she hyping? Like, what is she selling? And there's other people arguing that she kind of like missed her moment, right? She had this viral moment that's about to pass, and like she hasn't made the most of her attention. And so it's interesting to me that you kind of turned this obviously true passion of yours, but this like massive event into what's like a really cool, interesting next generation company that
Thank you.
Carries on that legacy. Yeah, which I think is awesome.
Thank you. Yeah, I'm also trying to think bigger than just like a quick flip,
Yeah.
I think for a lot of people, whenever they have their viral moment or something like that, it ends up being a quick flip. They're selling some merch or an NFT token or something like that.
Yeah.
Versus I'm actually trying to build something much bigger than myself. A lot of people ask me like, why are you even doing this? Like, can't you just retire or like take it easy now for a while? And to me, it always just comes back to like why I got into tech in the first place, right?
Totally.
Like it's always to me been about building a legacy, building something I could leave behind, something I'm proud of, something that kind of lives on beyond me. Trading was just this very, somewhat lonely, also, one person kind of role. And it's also, it doesn't scale beyond me, right? Like if I'm not trading, if I'm not active in the news, I kind of lose touch with everything. Versus building a product, building a team, building a company, I think that actually can leave lasting effects on the world. And I just saw something that I just can't get out of my head. That like the modern internet trader is fundamentally different than previous traders. And if you just look at the landscape of newsletters and webinars and pump and dump discords, like it's all really disgusting, and no one's really built a platform to kind of like clean up all the bad actors, but also just serve information in the way that the internet native trader kind of consumes it. So
interesting.
What's your relationship these days with WallStreetBets? Because ostensibly you kind of grew up in this community, and then you're kind of creating a platform around WallStreetBets as well that could, or it probably has, pulled some users away. So what does that relationship look like, given that's kind of where you got started, but maybe they weren't building out tooling and whatnot for their their users?
Yeah, WallStreetBets is sadly just a shadow of its former self. To me, it's nothing more than an Instagram meme page these days. And no fault to the bonds. I think they've done a great job compared to other subreddits, and they've built custom tooling as best they can to try to manage the flood. But you just can't scale a subreddit. It just kind of descends to lowest common denominator, which is usually memes. And so once when it crossed, I think they're at like 13 million subscribers now. It's just really hard to control it. And so that was actually an impetus to kind of I have to build my own thing now in order to kind of develop my own algorithm that balances, between memes and DD and positions and polls and actual good discussion. Actually, the highest compliment that I've gotten is that this feels like OG WallStreetBets. WallStreetBets before 2020, where people were actually posting their crazy gains and losses and theories and kind of actually discussing stuff versus just yelling into the void.
So interesting. I'm actually curious, like, what is your ideal quote unquote like customer persona? Like, how would you describe like the average AfterHour community member, or like the few personas that you're seeing on your platform?
Yeah. So I've met up with a few of them, and it's crazy. It actually runs quite the gamut. I've met some, L7s and directors at Google who are very active.
Full circle. That's so cool.
AfterHour users, and to me that just speaks to there's a degenerate in all of us. And there's actual Wendy's workers who are just kind of checking out AfterHour, making their trades in the morning. I think the typical profile I would say is someone who just started working, so they are actively working, they're not full-time trading, but they're just trying to get out of the rat race, they're trying to find any additional edge. And they basically spend all their free time, mornings, bathroom breaks, evenings, kind of just, hopping around the internet doing their research. They hop around on Reddit and Twitter. They Google some stuff. But right now they're saying that they had the highest signal on After Hour because these are actual plays and seeing other people actually put their money where their mouth is. And so that makes me really, really happy to hear.
There's it's this fun concept on many dimensions, like, and people were talking about it with Wall Street Bets as well around like degeneracy. And yet I'm sure there's some pushback that, some folks might say, hey, this isn't good. You have people in some cases who might be losing their money. Obviously, some cases, people who are making a ton of money. Like, how do you think about like good, bad, neutral? Like, how do you think about, creating a platform where, in certain situations, maybe folks are losing money. In certain situations, folks are making a lot. Like, what goes through your head and as it relates to, I guess, you could almost say the morality of building After Hour?
Oh yeah. I'm looking forward to the CNBC article where the headline is like After Hours making a mockery of Wall Street.
I'm sure. Yeah.
Ruining the financial integrity of the markets.
You're also drawing their users too, or drawing their viewers. So.
I mean, I think it's that kind of like holier than thou feeling that really pisses me off from like the incumbents, that they think they know better, right? They're looking down on the Main Street or retail trader. I mean, you could say it's a defense mechanism. You could say they actually really believe it. I just, it's such hypocrisy when you have like quant funds and hedge funds that literally just play on like, sub-second micro scale to find alpha and edge, right? What market making is that? And then you have these, so-called, dinners in New York where investment bankers getting together, discussing trades and ideas, et cetera, et cetera. So I don't know. I think people, if you're an adult and you should be allowed to invest, you should be allowed to be in charge of your own decisions and own that same risk. Just like spending a lot of money on a lottery tickets, like anyone's allowed to do that. No one's saying, hey, we need some guardrails for people that could buy lottery tickets. There's definitely no guardrails at the actual casinos, right? Like, why are those industries like allowed and even celebrated sometimes? And sports betting has also been recently legalized and picking up. And so, I think the public markets are actually pretty fair as long as you actually spend time in like decent companies, right? Like not penny stocks, not stock companies that you never heard of. I do think, the SEC needs to do a better job of finding these pump and dumpers who just spit out pure lies. That's also very, very disgusting. But other than that, I think let the people invest.
Love it.
I'm curious too. GameStop is obviously an iconic moment for lots of reasons, but I think people also saw it as like something that could permanently change how investing is done, I guess, on two dimensions. One is how like hedge fund and professional investors evaluate their own investing, because they now see that retail investors have a lot of power. And then two, I guess, related to that, I'm kind of curious if you think there's a possibility for another GameStop like event to happen. And if so, how would it catalyze in kind of like today's internet culture?
Oh, that's a good one. I do think the alphas moved away from, meme stocks and short squeezes for a bit. I like to think of it as like the algorithms have, fine-tuned themselves to eliminate that as soon as it happens. And there have been some articles that hedge funds are, not doing as much shorting or like shying away from some of these things just because, they'll get blown up if retail does something weird again. Can it happen again? I'm not sure. And I want to say I like Elon Musk's quote, which is what like the most interesting story is reality or something like that. So anything can happen again.
Yeah, it's true.
In building After Hour, it's you're building an invite-only community to start. Why kind of start with that move specifically? Like, why was it important for you to kind of start with curation and curious, like, for any learnings for anyone else who's kind of thinking about starting, community themselves?
Yeah. No, I mean, I think when you're thinking about building a community product or in a consumer social network that involves UGC and involves, content, the hardest thing in the world is that 0 to 1 phase, getting it going, making sure it doesn't feel like a ghost town, right? And there's different techniques people use to kind of fill that void. You got import content, you got fake content with AI now. But I genuinely wanted like people in there discussing what's going on in the market, discussing their plays. So it was really about kind of almost handpicking the the people that I want to be setting the tone
Mhm.
for all the kind of content going forward, right? And so I am fortunate that I did know a lot of these folks in my community just because I was just so active, replying to everyone. And I think it was actually going even a step further and becoming even more available for these folks, right? Because like I don't know, for most people they don't know anyone that's building an app, right? So as soon as you kind of give them like, hey, here's my phone number, right? Like text me about anything, and you got that blue number. So that's like a big one. Yeah, it was a lot of community management, community leadership, setting the tone, picking the right people, and then a couple of DMs like, hey, can you make a post here today? Hey, what do you think about this? That's worth a post, right? And just kind of being everywhere all at once.
Yeah.
I was maybe one final question, and then we can move to rapid fire. And this is normally actually a rapid fire question, but I'm just so curious to hear about your longer answer because of how much or how plugged in you are to kind of the internet and different communities, etc. You kind of talked about earlier how how you even got started as just like being really plugged in and kind of being on the outskirts of these different subreddits and other discords and things. And I'm curious if there's like we call it a mega trend that you're excited about. It could be related to fintech or stock investing or something. It could be a broader consumer trend about millennials, Gen Z, a different generation. I'm curious, like, what are you excited about on like a mass trend scale right now?
Oh man, now you're asking me to put on my VC hat.
Or like, what are you excited
I can give
about?
my hot takes on
please.
the mega trends, or what I call the brute forcing of a mega trend over the last couple of years.
I would love that.
I mean, there was a quote from Chamath in the Arena Palpatia a while back where he said, any investor who claims skill and has made their money on internet companies over the last 30 years is bullshit, because you've been riding on the biggest macro trend, tailwind of adoption, right? Like people just coming onto the internet went from like a couple 100 million in 1990 to billions now, right? So that's just that mega trend has been the most fruitful from the 90s up until arguably 2018. And you can talk about all the sub trends there with the web and mobile and et cetera, right? All the way to 2018. But specifically, my hot take is in 2018 to now, I think there has been a desperation to brute force a new tailwind. Any hint, any inkling of like this might be it, right? You get the articles, the thought pieces, you get the investment monies, you get one or two, overfunded companies that make all the news. You could call it a industrial complex or whatever, right? It was done for chatbots. It was done for local delivery, creator economy, remote work. Crypto is a big one, right? And now you have AI, and it's the same thing happening again. It's like this is is this real? Everyone wants it to be real. I think. I mean, that's the aligned incentive. Everyone wants it to be the next one because it's so exciting, right? Like there's this new technology, there's a new wave. We'll make money here. We can make companies here. Consumers get to use the cool new thing. So everyone and the media gets all the clicks if they write about it. So everyone's aligned to make this the next big thing. But fundamentally, is this something people want? And so that turned out not to be true for most of the other trends. AI is still in this question mark period where all the demos on Twitter go viral, but these are actually any retention and usage. So that's my hot take that there's been this brute forcing of the next macro trend, and I'm still not seeing it, to be honest. I'm still not sure where it really is. To me, I still see this almost like last Web 2.0 play in social finance, where all the media platforms and the way these users interact with finance is still back in like the Web 1.0 days. So, and no one's really kind of figured out how to build the right consumer social product for the financial audience. So I'm hoping AfterHour will own that. It is a big opportunity.
Huge opportunity. I buy that. That's really cool. Cool. Leo, do you want to kick us off with rapid fire?
Sure.
Close us out.
Yeah, absolutely. So these are supposed to be answered quickly, one sentence or less. So the founder you look up to most.
Founder I look up to most. I want to say it's kind of cliche, Steve Jobs, but also Steve Woz. I just love how he just does his thing, you know.
Yeah. The book that most changed your life.
Book that most changed my life. You know, whenever someone asks me that, there's this book, there's this eating book by a Harvard medical school guy I read a while ago. It's called Eat, Drink, and Be Healthy, by someone from Harvard Medical School. It's a really good guide to just like what is carbohydrates, what is proteins, etc.
What job would you want if you couldn't be a founder?
Oh, film director.
Oh.
When I was younger, I really wanted to be a film director.
What kind of movies?
Anything, I guess. I didn't specifically have a niche yet, but I love the editing process. I love the writing process. I love turning my vision into, you know, something people can watch.
Favorite account, whether it's maybe it's on AfterHour, maybe it's a Twitter account, IG meme account. What's your favorite one?
Nice. On AfterHour, I think my favorite account is this one user named a Pet Rock. I have no idea who it is. Like, he makes some of the craziest plays, and actually is really good at writing too. On YouTube recently, I've been obsessed with Ludwig. He just has a great way to. He's a Twitch streamer or now a YouTube streamer, and he does like these crazy challenges for himself. And there's stakes where like he has to donate money or give money to his audience, and he just is great. He's a great mastery of, you know, the streaming domain.
I guess, a quick side note, did you ever consider being a creator, particularly like in the fintech or stock trading space? Obviously, there are tons of them, rather than a startup founder.
Yeah. I mean, I got my DSLR. I have my Shure SM7B. Like,
true. So you are already one, but
overspent for my Zoom setup. I did consider it for a little bit, and I think the other macro trend here is the rise of financial influencers. I think you know, the next generation, they're learning everything about the world from each other and from influencers, and finance is still on the up and up. There's just so much to cover, and the Gen Z is just coming into, you know, money and jobs and stuff like that, so they're going to be learning from other influencers. But to me, influencing is hard because it's a nonstop grind. You know, it's just, you gotta be showing up every day, making content. You can't take a break. And once you hit, you know, 1 million subscribers and you have that momentum, you don't want to take a break either, because you've got that, you know, slow momentum rolling. You don't want to mess up the algorithm, right? So you might feel trapped even. And I don't know. It's definitely, I respect a lot of the creators that do that.
Maybe our last question. What's a piece of conventional wisdom that you strongly disagree with?
It's a piece of conventional wisdom that I strongly disagree with. If you're young with high earning potential, you should not be invested in the next ones.
I love it.
I literally, a startup founder I met recently, they said the same exact thing. They're 24, and they were like, I don't believe in saving in a 401k. And I was like, all right. I mean, he's backed by Sequoia at 24. I'm like, you're right. You're probably a likely person to be a high earning potential person, and like, F it. So anyway, I think that's a rising take.
Thank you.
Love it. Kevin, this has been so fun.
Thanks so
Thank
much.
you.
All good.